Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 942A, and today's date is April 11th, 2016, and the title of the episode is Yellen and Obama have closed-door meeting as the economic recovery illusion disintegrates. Let's get right into the economic collapse financial news. Now, today, gold is up. It's about up $14, $15 today, and we're starting to see gold creep up every single day. Now, that means that in the next 2 days or so, or next day, we're going to see a suppression of the gold. We're going to see gold drop. If gold moves up a little bit more, like $10, $15, we're going to see it suppressed, and we'll see them try to push it down. We'll see how low they can get it. This is a sign that things are starting to rapidly fall apart. Because remember, going back to December, gold was around $10.50. It is way up at this point, and it's becoming more and more difficult for them to keep gold suppressed. A lot of countries, a lot of savvy investors out there on the down low are purchasing huge amounts of gold at this point. And we're starting to see that the economic collapse that we've been talking about is accelerating at this point. More and more information is coming out. More indicators are showing us that things are rapidly deteriorating. And we're starting to see out in Australia that the housing bubble there is popping. Bank of America is out there saying that we're going to see a decline in the housing market in Australia, and it's not going to improve, not even the next decade. And things are going to rapidly fall apart as we go forward. And we're not just seeing this in Australia, we're seeing this in Canada. Yes, there are still pockets of areas where there are bubbles, and we do have to remember the central banks cannot push the entire country straight up. There are certain areas they focus on to make everyone believe that everything is fine. Now, you might live in one of those areas where things are booming, but we've seen what happen when the boom town goes bust and all of a sudden everything comes to a screeching halt the next day. We saw it happen in New York. We saw it happen in Miami. We saw it happen out in California. And we're going to see that once again. Things are rapidly deteriorating at this point. All bubbles are starting to pop now. We see Denmark. They are paying people to take out mortgages. Belgium is paying people to take out mortgages. And this is because we are in negative interest rates. Think about it. The central bank needs to bring the world into negative interest rates to keep the system alive. I mean, that should just show you right there and then that we have major problems on our hands. Obama, and we discussed this before, he's pushing the Federal Housing Administration to give more loans out to those people that have hardly any credit at all. Just go out there and do it. We'll guarantee it. Don't worry about it. Because they need to pump up the bubbles. They need to pump up the debt level. Without the U.S. government central bankers pushing these bubbles up, the rest of the world, the people I'm talking about, they're just sitting on the sidelines right now. Now, we're seeing very interesting things happening. B.H. Sutton Mez, they have filed for bankruptcy. They built the 78-floor luxury condominium tower at Sutton Place in Manhattan on the Upper East Side. And we can see right now that demand for luxury real estate, it has shown signs of slowing down. Signed contracts has dropped by 11% year on year. Things are starting to rapidly fall apart, and this is going to spread all across the country, all over the world. It's like a domino effect. It will not be able to be stopped. Now, in the U.S., we're starting to see the supply chain. It's worse than ever right now. And we're in a huge slump, and it is continually declining. If we look at wholesale sales, when we were in the recovery in the year of 2010, 2011, where they told us everything is fine, they created a lot of free money, they pumped the system up, we're averaging around 12.5%. Now, fast forward from 2010 to 2011, that was the 12.5%. Fast forward to 2012 to 2014, we dropped down to 4%. So we had a drop. Now, the beginning of 2015, going into 2016, we are at negative 3.1%. If we look at retail sales, and we're going to exclude autos right now, and we go from the same thing, 2010, to about the beginning of 2012, we see auto sales were up like 6% or so. Retail sales were up 6% or so. If we look at January of 2012 to the end of 2014, it dropped to 2.96% of retail sales. Now, from January of 2015 to the present, we see we are at 1.45% in retail sales. Factory orders, on average, in a recovery, we were at 14% between 2010 and the beginning of 2012. From the beginning of 2012 to the end of 2014, it dropped from 14% to 3% for factory orders. And going from 2015 to the beginning of 2016, where we are right now, negative 5.4%. All of this is declining right now. And this shows us and tells us that we are in very dangerous territory. Deutsche Bank right now is saying the world, it's at the point of no return right now in the default cycle. Over the weekend, there was a report that was issued, the global company bond defaults at highest level since 2009, in which it said that the global bond default rate by companies is running at the highest level since 2009, with the U.S. accounting for the vast majority, according to the rating agency Standard & Poor's. A further 4 defaults this week, with 3 coming from the troubled oil and gas sector, pushed the overall tally to 40, with a little over a quarter of 2016 done. Now, the U.S. default cycle is going from bad to horrific. So what we're seeing right now is that there are clear signs that things are going to get a lot worse. And the next default cycle, it's now in place. And this is just going to accelerate. Now, we already see our first bail-in, well, not really our first, but under the new European rules, the European Recovery and Resolution Directive, we see that in Austria, they're going to be sharing the losses with the senior creditors. So the Austrian Financial Market Authority, in its function as the resolution authority pursuant to the Bank Recovery and Resolution Act, has issued the key features for the further steps for the resolution of HEDA asset resolution. It's going to be 100% bail-in for all subordinated liabilities, 54% bail-in resulting in 46% quota for all eligible preferential liabilities, the cancellation of all interest payments from January 3rd, 2015, and we see it's already beginning. There's a reason why they have these bail-in documentation. There's a reason why they created it. The reason is because they're going to use them. They know and they knew and they understand, they realize that this system cannot continue on. It cannot be sustained. Now, we see negative interest rates in Japan, throughout Europe. Of course, here in the United States, they increased the interest rates by 25 basis points, but I think they're going to eventually reverse those or try to push it up one more time, and all of a sudden, we're going to have some type of an event and say, whoa, look, see, we tried to bring in a recovery, but look what happened. So we'll have to wait and see, and we know there's an emergency meeting going on with the Fed right now. But the IMF is out there, and they support negative interest rates. 6 of the world's central banks have introduced negative rates. The Bank of Japan, European Central Bank. And we see that the IMF is supporting all of this, saying, yes, this will help. It will help deliver extra monetary stimulus and ease lending conditions. No, that's not what it's going to do. It's going to keep the system propped up for a little while longer, because zero didn't work. So now they have to go to negative. And we see already that the economic collapse is happening all around the world. Coming out of the economic collapse blog, we see that Brazil, It has the seventh largest economy on the entire planet. Well, guess what? They're in a incredible economic collapse right now. Even the corporate media is calling it an economic collapse. CNN is out there saying that Brazil's economic collapse is the worst than its government once believed. Venezuela is also collapsing. And this goes on to Italy. It goes on throughout the other countries. And of course, when we come back here to the U.S., what do we see? Well, we see that the illusion is continually being pushed. We see GDP has been downgraded many, many times. We're at 0.1%. And the U.S. government, the Fed, they're going to create a way to keep the illusion alive by manipulating more statistics, by doing whatever they possibly can to make you believe that everything is fine. Because again, they're pushing something else. They cannot take the blame for this. They need to blame this on another group, another country. It doesn't make a difference. They cannot be blamed for what's about to happen. Now, last week, we see the Fed called a surprising meeting, which was going to be held today. And we can see right now that they're going to be talking about maybe negative interest rates, maybe QE4, or anything else, because they realize that this whole thing is starting to fall apart. Now, Obama and Biden are going to attend this meeting, because what we're seeing right now is the entire economy starting to fall apart. Now, you don't have a meeting if everything is fine in the economy. You don't call an emergency meeting like this if everything is fine in the economy. If there are troubles worldwide, and it's eventually going to hit America, or also Canada, also Australia, UK, and everywhere else, you have a meeting to discuss what's going on. And you discuss ways of trying to prop the system up even further, so it doesn't hit just yet. Because remember, they don't want to be blamed for this. So what are the things they're going to be discussing? Well, they're going to be discussing what is going on in the world, because manufacturing's down, retail's down, unemployment is skyrocketing, debt is skyrocketing. A lot of the private Western Central Bank countries are in negative interest rates. And here, the illusion in the United States is rapidly deteriorating. It's disintegrating right in front of our eyes. As more and more indicators are being put in front of us, we see that things are rapidly falling apart. And that's what's happening right now. Things are rapidly falling apart, and they're trying to figure out a way how to keep the system propped up. Yes, can they continually manipulate the statistical information? But after a while, people look at this and say, okay, this really doesn't make sense anymore. Stock market's going up. Corporations are laying off left and right. Profits aren't there. That means more retail investors are going to leave the market and try to escape. Precious metals are going to continually go up because more and more of the paper currency is going to be pouring into physical gold. They're going to lose control of that. And after a while, the unemployment numbers don't make sense. Everything starts to make no sense whatsoever. And this is what's happening right now. And this is what they're worried about, because if they don't do something very quickly here, the whole thing's just going to come to a screeching halt, and we will blame them. And this is why I've been saying everyone needs to be prepared. We're heading into a period, and actually, this really looks very close to 2008. Remember when Obama and McCain were running for election, and they were telling us that the economy is absolutely fine? Of course, the head of the Fed at the time was telling us that everything is contained, not forecasting a recession. McCain was out there saying the economy's strong. And then all of a sudden, during this whole period in October, everything started to fall apart rapidly. But prior to this, everything was fine. Here we are in April already, and things are rapidly falling apart. Of course, someone sitting on the outside, not following what's really been going on, they're thinking that things are still fine. I hear people all where I live talking about how the real estate market's going to continually rise. It's going to go to all new highs. And of course, I'm sitting there going, oh, I heard this before back in 2008, and everything just fell apart. And we're hearing the same talk once again. And that tells me that things are rapidly falling apart. And we can see right now that things are. We've been looking at everything right now. And if you have not prepared, start doing it. Buy some silver and gold. Keep cash on hand. Have food and water. Whatever you do, do it. You can go to lifereliance.com. They have bug out bags. They have water filtration system. You can customize your order. But it doesn't matter how you're doing it, how long you've been doing it, as long as you are prepared for what's coming. Because you don't want to be at that point in time where everything falls apart. People run to the market, especially if the Fed and the central banks decide to hand out currency to every single person. If they start doing that, that means things are going to devalue very, very quickly, because we've seen this before in Weimar Republic. We've seen it in Africa. We've seen it in Venezuela. We've seen it in Argentina. And we know how that ends. So we need to be ready. We need to be prepared, because things are rapidly deteriorating right now, and it's not going to reverse itself at all. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.